They seem to be having a good date. You have seen a 1-week highs coming in for gold prices. It's a 1-week highs for crude as well, and you have seen multi-week highs coming in for copper prices as well. So good amount of turnaround coming in. It's opportunity buying on the lower side. The dollar has declined a bit. All of that really seems to be supporting the prices right now. How do you trade all of those commodities? For that, let's get in Kunal Shah, Head of Research, Nirmal, and he joins us live on the show. Kunal, hi, welcome. Let's start with the precious metal space first, and after that, sharp decline, some recovery, jitteriness, choppiness. How are you playing the session?
Well, we are expecting some bit of pullback from here also, especially in the case of gold and silver both. We expect gold to move up and test levels of $1460, and even for that matter, silver can test $24. So some bit of bargain hunting is likely after being heavily oversold right now. So we expect gold on Indian bourses to test around 26,900, and as far as silver is concerned, we expect silver prices to move up and test levels of around 44,000.
Kunal, would you advise a long-term buying in physical markets as well for the precious metals there? Because we will soon get into that wedding season. Akshaya Tritiya buying would also start kicking in. Is it a good time to buy for a longer term?
I don't think so. The kind of scenario we have right now, going forward, there are very important developments which are going to take place. We are going to see US bond purchase program is likely to end maybe 3 months or 4 months down the line. And looking at that, foreseeing that, we recommend that this is not the time where you think about going long-term investing in gold or silver. The way prices have corrected, a lot of people feel that there is an opportunity to go long. And again, maybe by the end of the year, you may see prices moving up exponentially. That's not the case. The story seems to be over for precious metals, and we are going to see a gradual drift in the prices of both commodities over a period of next 3 to 4 months, where gold is likely to test levels of $1,250 to $1,275 on COMEX, and even silver for that matter can test $21 or $20.50.
All right, so intraday good, like in long term, the prices are expected to be sluggish there. Kunal, what's your sense then on energy space? The crude prices have seen a good rebound in the European and the Asian markets as well today, nearly 0.5% on the higher side. Do you think it's a good chance intraday high up on the side?
Well, yesterday's inventory was bullish, and more than that, tomorrow's US GDP number is expected to be good, and that's why market seems to be discounting it well in advance. I'm of the view that the maximum $1.5 to $2 upside on the NYMEX is likely. We don't remain bullish on crude oil. We are of the view, again, crude oil is likely to drift and test levels of $88 to $87. We don't see any major rise in this demand, and at the same time, supply side is at record high. So oil is also going to go down going forward.
And of course, there is no much news coming in for the base metal sector as well. Though today is a good day, 1 week highs coming in for copper as well, 1% of gains on LME. But how would you want to trade that?
Well, especially for copper, there has been some positive development in China. We have seen the stocks in China is 30% down after the way the prices have corrected. So some bit of physical buying in China for copper was witnessed. As far as the premium is concerned, the Chinese copper premium have jumped $40 after the sharp correction. But I'm of the view this rally is also likely to be very short-lived. The fact is that the recent Chinese data is pointing towards a scenario. If this weakness continues, China may be 6 to 9 months down the line may fall into hard landing, and that's not good news for metals. So copper maximum 390, 388. I think one should go short, and again for the target should be 365 to 375 from 3 months perspective. So not very bullish triggers for base metals. This upside is just a pullback. But the overall downtrend is likely to continue going forward.